I feel that before we talk about, hey, go out there and let's work hard and let's start buying assets, you need to work on the foundations. First, build your credit score. Make it your priority that you're going to build it up. Because when the opportunity arises, and it will, you will be ready. So it's not about only being seeking opportunities, it's about being ready for the opportunities. Hey, we're back here with Money Week and Money Series that I came up with the last couple of days. I've gotten a lot of questions and kind of in regards to the credit video. And as I gone through my, as I said in my last video, had my credit down to like the lowest it could ever be, really bad. And then I kind of understood and I did my research and I followed some referrals from online credit gurus, and I found some books. And like anything else in life, there's a book for anything you want to learn or like kind of really teach yourself about. So if you're trying to have any questions about anything you want to look up, yes, we have the internet. Great, you can search everything nowadays, but sometimes good old books have deeper details that will give you just a bit of an edge on becoming a little bit more educated on the topic itself. So not that there's anything wrong with Wikipedia and Google and all these things that we have online, because I use them every single day. But sometimes some certain books are worth the money. So one of the books that I recommend for anyone that wants to really get a little bit more educated on their credit and how to prepare it, and maybe how to maintain it and how to work the whole game of credit. It's all a game, right? And then I don't think a lot of people don't, most of us don't know how it really works. Everything's just based upon like experience and what works for certain accounts and how certain things became. But at the end of the day, it's like this huge, it's like that's our taxes. Like we don't even know how it works and how they tax us. It's like a basic guidelines, but it's a case by case scenario on every situation. It's not the same for everybody, and that's kind of the same thing with credit. So the book that I recommend and I kind of read, I did read, and when I was really going through my learning how to fix my credit, was the ABCs of Getting Out of Debt by Garrett Sutton, and it's one of from the books from Rich Dad Poor Dad he recommended in his book as well. So it's part of their collection of books. And I was kind of a little bit weary about it in the beginning because it's like, it's recommended by the same book, but it was actually a great read. So as we all know, credit for me, I would kind of be doing disservice to my own friends and family and me watching if I didn't bring up the fact that in the process of building wealth and you're trying to get better with obviously your personal finances, your credit is essential to your future self. And although you're young right now, you probably just graduated, you're like, I really don't care. I just want to make money. Great. Your income helps. So I'm not saying that your income is not going to be a great factor in your endeavor in your journey, but sometimes, most of the times, it benefits you to use leverage. And what I say is that other people's money. So, when you're gonna go you're gonna go purchase these things. Let's say for example, the biggest loan of your life, right, which is our mortgage. You're gonna go and purchase your home with a mortgage. You're not gonna go and pay cash for it. If you're gonna come up with a cash, kudos to you. But most financial gurus are not gonna recommend that in the first place, because if you're buying your house cash, let's say you buy a $300 house and you pay cash for it, great, you have no debt, you're good to go. But now the money you have saved up in your accounts, which is obviously capital, you already depleted it, because now it's gone from your accounts. Now it's in your house, and the only way to get rid of that, well, to extract that money from the house, which is called capital and liquidity, is by selling your house or taking out a refi and cashing out on the equity. But for the most part, you have to. It's a process. You can't get that money out of there overnight. It takes time. So if you had an opportunity, or you had to some type of life emergency, God forbid, or you had some type of opportunity with a business, or you just figured you want to start your own business, that money's gone. You not gone, but the money is not going to be easily accessible as opposed to it being in your accounts or in cash. So for most wealthy gurus, they recommend, even Rich Dad talks about it as well, learning how to use leverage and use other people's money. So you take out loans on certain things you want to buy. Now, in order for you to take out loans, most of the time, not all loans, but most low interest rate loans, they're gonna ask for your credit. So your credit, unless you have the capital, like I said, to back up the loan, the credit is what they go based upon. How credit worthy are you? And as we know, our system here in this country is based on a credit score, which, again, like I said before, not all of us know what. Most of us, and I'm including myself, we don't know how it really works. We just learn by other people's advice, and nobody really knows. At the end of the day, it's just a game, and you're playing it, and hopefully you're making the right moves in order for your credit to stay afloat. But there are basic guidelines that everybody knows, or most people that give advice know about it. But again, it's not guaranteed on how to your credit is going to be scored. So your credit is going to be the most important thing for your, especially when you're young, moving forward. Because when you want to go out there and you don't have the means, where you don't have the money for that new car, or not a new car, but let's say you have a used car and you don't have the money, you can take out a loan for it. And if your credit is not up to par, or it's not at all, if you don't have a credit at all, it's going to be quite hard to get that approval of a loan. And if you don't have the cash, then you're kind of, in the limbo where you need a car to get to work, or maybe you need to move around. So, well, depending on what part of the country you're in. But it does definitely hinder you. So, and then also if you want to go in and get an apartment, nowadays, most apartments run your credit. And they take that into account to giving you an apartment at least, which I think is not right. But at the end of the day, that's the system. That's the way it works. These private complexes, they need your credit score in order to approve you for a certain leases. And so, the credit score are becoming more and more important to all our aspects in our lives. And I know when I was working in the banking industry, I realized and saw how credit scores gave people access to certain loans that otherwise they wouldn't have had unless they had a credit score. So for me, from my experience, your credit score, you want to start building it early, because it is going to be your foundation for not only having access to capital that you otherwise would not have. It's gonna give you that starter for your building wealth in the future. If you want to go and buy a real estate property, if you want to invest into a business, if you want to do certain things and you need to borrow instead of using your own, your credit is going to come into play for a big deal. So for all my young individuals watching this, I know, for right now, your credit is probably most likely it's not going to be in the best condition, especially unless you had great parents. I had friends that had their parents put them on their credit cards when they were young, so their credit was built it was pretty much at a top notch when they got out of college. As for me, if you're like me, my mom and my dad wasn't around, so my mom credit was not up to par. It was really bad, and she did not know that she can put me under her as an authorized user. I'll be talking about it a little bit later, but she did not know that, and I didn't have credit coming out of school. So I applied for my own credit cards, maxed them out, did basically the worst things you can do to mess up your credit. I did them all. I didn't know. Obviously, I wasn't educated. I didn't really do my research. Google wasn't that strong back then when I was in college. So I wasn't really aware of how much I was hurting my credit. and it came back to haunt me right after I got out of school, and it affected me. So I really wanted to just make this video on how, how good credit is not that hard to attain, one, and it's a fact that you need it in our society nowadays. So I've seen a lot of controversial and other opposing sides where they say credit, you don't need credit to live, and it's just a whole obviously a whole capitalistic situation. But to be on the safe side, have it. It's, if you don't need it, if you don't use it, it's fine, but just keep it afloat, because when you might need it, it comes in clutch. So these are the top 5 categories where your credit score is determined. Again, speak to legal advice if you want to really find out the deep details, but these are the small parts of your credit. So it says here there's 5 categories, right? So you got the payment history, right? The amount you owe, the length of your credit history, the new credit, how much new credit you have, and the type of credit basically what the credit that's in use. So but the number one they take into that I'm seeing, that I've learned and I've seen, the number one factor that helps your credit is your payment history, meaning you don't pay late. That's what, if you want to like derail your credit, it's pay late. You want to pay on time for every single account that you may have. So always try to avoid the late payments as much as you can. Some accounts, some creditors, some credit cards that I've had issues when I've forgotten payments, because we do forget sometimes. I've done it many times. If you forget, you can call them up and say, I forgot, I'm sorry, can I just pay it and not report me to the credit bureau? And some of them, they might wait 30 days to report you, so you have 30 days to pay. But some of them don't work with you. Some of them don't want to hear it. And if you do it too often, they just report you immediately, and that really affects your credit score. And just keep in mind that when you have a late payment, it stays in your credit report for up to 7 years. So it's something that follows you, and it affects it hinders your credit score. So number one, don't pay your credit cards late. Pay it on time. And then number 2 is also how much you owe, right? So the total debt that you have. And sometimes I've ran into a lot of people that said, I have great credit. I pay my credit card on time every month, and I still don't see my credit score going up. And for the most part is because they're maxing out the credit cards. So one thing is, you don't want to max out your credit card. That's one thing you want to stay away with unless you have an emergency. I had it before where I had lost my job, and I was living on my credit cards for the couple of months that I was unemployed, and I had to max them out. And I know that my credit score went really down because I had them all maxed out, but I had no choice. So if you have a choice, don't max, just because, let me give you a quick example. Just because you get approved for $10,000 in your credit card, doesn't mean you maxed all of that out. It's a credit, you have a credit limit of $10,000, but it doesn't mean you use it all. So you want to stay, they say that a good number of credit use of your balances is under 10%. So that means for every $10,000 you have in credit availability, you want to be using up to $1,000 and no more. So if you just got a new credit card and you got approved for the $10,000, keep in mind that you want to stay below $1,000 in using that credit card. I know it sounds like it's kind of it just doesn't make sense, but it's just the way it is. They're giving you the credit, but they really don't want to use it. They want you to use the least you can of it. Now, if you're gonna use it, all of it, make sure you pay it off before the end of the month. So I know for me, since I use my credit cards, I use my credit cards for my grocery shopping. They definitely go above the 10%, but I try to pay that off most of the time, end of the month, every single month, and that helps you, because now when they report it to the credit bureaus, it looks like you have a zero balance, even though you used it, probably a lot more than 10%. But also, make sure that you're paying it off before the closing date, where it has a closing date on your statement. That's very big too. I ran it to myself, where I was paying it off, but I was paying it off after the closing date, so they were showing the balances that I was using my credit card over 10% of the balance, and it was hurting my credit score. So make sure that you're using less than 10% or 10% max of your credit limit. And then you got the length of your credit history. So now the length of your credit history is referring to how many accounts, not how many accounts you have, but how long your account's been open. So number one thing is, I believe, is, don't close those old accounts that you're using. Those old credit cards that don't really give you cash back, don't give you rewards. Some people, we close them because they're not really up to date to the new cards you have. But it hurts you if you close the accounts, because now, from what I learned, the history you had since you opened this account, let's say you opened the account, let's say 5 years ago, that old credit card that you don't really use anymore, that shows that you have a credit established from 5 years ago up until now. So you have 5 years of relevancy in your credit report establishment. Once you close that credit card, now you're gonna start at the most recent one after that. So let's just say, I'll give you a quick example, and I did this myself, so I'm gonna definitely be an example to you all right now watching. So let's say that you had a credit card in college, and you opened up a credit card. Let's say you just graduated college. You opened the credit card, say 10 years ago. Now you've been out of school for 10 years. And you recently opened up a lot of credit cards, so you have credit cards, multiple number of them. But that credit card from college, which is 10 years ago, you decided to close it because you're tired of, how old it is. Maybe it even has an annual fee, whatever it may be. For me, it was because it had an annual fee. And you close it. Now, your 10 years basically of your credit history is gone. You start at the most recent one. So let's say 2 years ago you opened up another credit card, another one. They're gonna start at that one, and then now you're gonna start building from then up, which is kind of absurd. But yes, that's the way it works. They take into account all your accounts, and they average out the history of the ages of each account. So from what I saw from my report was, they took, let's say if I have my average of cards that I have about 5 years old, that's how much my basically my credit history was showing, 5 years of credit history, even though I might have had credit cards back 10 years ago and they closed out. So always try to stay relevant with your accounts. So don't try to close your accounts as you don't need to. Try to stay away from that. So that hurts your credit score. Closed accounts hurts it. So try not to do that. And obviously, they say 10% of your credit, 10% of credit, new credit cards go into your as well your credit score. So if you open a lot of new accounts, too much at a fast pace, especially credit cards, it kind of hurts your credit score. I don't know why, but they don't like it. They don't want you to see that you're using too much credit. And I'm thinking maybe because it seems like you're applying for too much credit, meaning you need it. And I guess they don't want you to be in that situation. So one thing I learned is the credit score system is super, super vague. It can work, like I said, it could work for certain things, could work for others. It might not work for you. But it has we have a basic guidelines and what it works and what doesn't. But it changes, and sometimes it doesn't. That might not hurt people as well. So I don't know. It's just staying with the guideline. And here was the types of credit in use. So they do like to see a mix of different credits, and so it just can't be all credit cards. They want to see some type of loans. I had student loans mixed with my credit card, so that kind of helped me. Even though obviously my student loans were a big, I felt like it was a big. I wasn't really too proud of having student loans, but they helped because they helped with the mix of credit that I had. So your student loans would be a mix, car loans, personal loans. If you have a mortgage, that's great. Obviously, your credit is great, but a mix of either. Obviously, when you're young, it's going to be car loans, personal loans, and credit cards. You want to have a mix of those three, if you can, and that would help improve your credit score, because now you have multiple types of credit, and that's not just credit cards, right? Your credit score is going to be a great factor in you building wealth and you having access to capital you never would have. Without that, it's not that it doesn't exist, but it gets more expensive for you to do things with a bad credit. And I'm saying it for us, especially minorities in neighborhoods that I grew up in. And I was working in the banking industry when I graduated school, and I saw how those that needed the funds would not get approved for loans or credit cards, and those that probably didn't need it but had the credit score got approved for loans and credit cards. So sometimes, if you might feel that because you have a good job, have good income, and you are a great individual, you're gonna get approved. You just walk into the bank, but the first thing they pull up is your credit score. So if you never had a credit, it's the same thing for me. I feel like if you never had credit, it's the same thing as having bad credit. That's the way to look at it. It's not that you're just a good person or bad person. If you don't have any relevancy, you have no track record, it's the same thing as having bad credit. Wrong. You never have credit. Let's say for the last 10 years, you never use a credit card, you never use a personal loan, you bought everything cash, you saved up for everything, you never used any type of credit. When you go apply for credit, when you go apply for that home loan, you're gonna be categorized as having bad credit. Same, because you have no track record. How can they know if you're able to pay off what they're gonna loan you? Even though you have income, even if you have 50% down payment, all of that, great. They still want to see credit. And don't be like I see a lot of my customers that I used to work with, that I used to help out, the clients, that it was only until the later age when they were basically almost retired that they realized that when they were trying to apply for, let's say, in their late 40s and 50s, they were trying to apply for a loan, especially a home loan. That's when everybody kind of really goes and applies in the banks for home loans, because that's one of the biggest loans they could ever take. When they realize how important their credit score is, where they pay cash for the car, they pay cash for everything, their vacations, they pay cash for everything that they did in their lives, and they couldn't pay cash for it, they didn't do it. And that is a great way to live. I'm telling you that right now. It's a great mindset. I try to live by that. But when you eventually need that, because you might not have all the cash, unless you're like a trust fund baby, or you have wealthy parents, and you want to go and buy something that's really, really up there, like obviously a home, or maybe just a business loan that you might want to start your business, and you might want to have some capital to start off. All these things are going to go and break down to one factor, which is your credit score. So there's a lot of theories of don't have credit, you don't need credit, you can live your life without it. It's just yes, you need to balance it out. I'm not saying that everybody should have credit cards, because some people can't. But for the most part, you need to learn how to use it mindfully, and also use it to your advantage. So I forgot one of the biggest steps. Maybe one of them is get your credit score report, or your credit report every year. Try to get it, and don't be afraid to personally check for your credit report, and find out why is your credit score, maybe it's not what you thought it was. Maybe it's either higher, maybe it's lower. There's always, a reason for it. But understand that if you don't reach out to it, if you don't look, basically look for it, or what I'm trying to say is that if you don't face it, right? Like I know for me, there was years that I didn't want to even look at my credit score. Like I was working in the banking industry at that time, and people were like, "Oh, I was actually advising people to get the credit report, and I was actually advising people to get credit cards, stuff like that." But I myself can never get one, because I was never approved for it. So I was like, "Oh man, my credit is horrible," and because of my student loans that I hadn't paid, and like I had when I was younger, I had credit cards that I had late payments on, which affected me as well. So I just never looked it up. I just figured I can't get approved for anything. I'm good. I'm not even gonna try. But little did I know that if I could have access to my credit report, I could have found out that it wasn't as bad as I thought. And all I had to do was a little bit of research, a little bit of homework on myself. All the time do you have to go to a credit repair agency. Sometimes you can go to, sometimes you can do all of it yourself. I know it's a little bit tedious. I know it's a little bit, you know, it's a little bit of a work for yourself. But believe me, there's certain things, you'll be surprised how simple it is. Like, again, you go to a website that's called annualcreditreport.com. It's supposed to be free for I think once a year, so it shouldn't be charging you, but I'm not sure. I haven't checked yet. And on there, you get your credit report, and you can see like kind of what it's on there. Make sure everything matches, everything you owe, all the accounts you have. Make sure everything is up to date. Sometimes you have old accounts that you paid off and they're still there, and you have the right to dispute that. You can call them up and dispute those accounts, and they'll investigate and they'll remove it. If it's just simple credit. Now, if you have like a whole amount of debt, a lot of counted collections, I'm talking about 4 or 5, 6, 7 or 8 collection accounts, a lot of credit cards that you can't pay. That's a whole different level. Like, you definitely want to seek out a credit repair agency. I don't know. I never really used one, but there's a lot of them out there. Just make sure you do your diligence and your research. But if it's just simple, like you have your own personal accounts, your own loans, and everything's up to date, you can do everything yourself. Just, keep up to date. If anything, you have websites like Credit Karma that gives you the credit scores there. So there's certain things you can do just to keep yourself afloat on your own credit history and credit report. And sometimes we take the time. Most of the time, we take a lot of our time to do things for others really easily. It's so easy for us to go and clock in and get that job and work 40 hours a week, and do it mindlessly. But when it comes to doing things for yourself and the benefit for yourself that you should be doing for yourself, because nobody's gonna do it for you, it's a lot harder. And I believe that. I've been there. I know that. I've been there. It's so hard to do things for myself. It's like, it's tedious. It's like, it's boring. I don't want to do these things. I don't care for these things. You might not care, but where we live and the system that we live in, it's recommended, right? It's not recommended. It's a must. Unfortunately, it's a must. This might have not gone our way. It's repairable. It comes back. Lines of credit, which is saying basically a credit card with your money on it, as the backup. But you can do that, or you can get added to someone's, which a lot of people are doing now. You can get added as a authorized user to somebody's credit account. Now, from my understanding from this book and from what I've learned, an authorized user has access to your account, but cannot make decisions, in the sense that they can't call in and be like, hey, I want to do this to my account. I want to add. No, they can't do none of that stuff. They get access to your account. They get a credit card. If you issue them one, they can get a credit card, and they can go buy stuff, but they can't close your account. They can't change your, like, let's say, change passwords. They can't change limits. They can't do any of that. All they do is they are able to use your account. And apparently that gives the authorized user gets that person's credit history on your file as well. So if they have great credit, it gets onto your file, and now you look like you have great credit. And it takes a couple of months. I'm not sure how long it takes, but individuals have been doing this for a long time, and your credit goes back. It takes a bounce back from where it was. Really relating this to young individuals as well. If you're coming out of school and you don't have the importance, you don't think credit scores or anything, you don't really care for it, I'm going to wake you guys up right now and tell you that your credit score is very important. A lot of things that we're doing right now, nowadays, most of the things we do in life have to do with your credit score. And I'm saying it again. Everything you're doing in life, whether it's going to get out life insurance, car insurance, even like I said, renting cars, going on vacations, just just to, everything you kind of try to do in your life nowadays, even home insurance. When you buy a home, your home insurances run up your credit score to see how's your credit score, and you might pay more depending how your credit is. So it's just it's just so important for us to manage them and to keep them as part of the game that we're playing in this life, right? So don't ever underestimate it. A lot of us underestimate it. I underestimated the importance of it. I learned, and I'm trying to show that to you moving forward. So it's very simple. It's a very simple strategy, like we say, but it's also very hard to do. You have to apply it. You have to understand it. Keep on top of it. Anything right now before you close this video, go on annualcreditreport.com and print out your credit report for all 3 boroughs, right? So now that's the whole game. There's 3 boroughs of credit, not just one. You can have 3 different scores. I don't know. That's just the way it is. So get it all and start just get on top of your own credit score. Do me the favor, please. Like, just be wise about it. Understand it. Understand what it is. If it's not great, work on it. If it's great, keep it like that. That you're doing great.